folks. Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we'd come to you today with a brief market update, kind of let you know what's going on out there. S&P 500 currently right around 4450. That is off a little bit from the 4500s that we had touched back in the sort of 4400 range, obviously, that we have talked about many times in the past. Market seems like it is going to hang out there for a little bit. And I think it's worth noting, that we frequently quote the S&P 500 because it is a broad, diversified sort of measure of large cap U.S. stocks. But it's not the only index that's out there. And I think for 2023, it's very important when you look at returns to understand how different indexes are performing. So you've got the NASDAQ 100, which are the 100 largest companies in the NASDAQ, which is a very tech-focused and growthy style index, and that is up a whopping 39.5% year to date. Just a phenomenal return out of those particular stocks. The S&P 500, as we mentioned earlier, is up about 15.8% year to date, which is still a good number, but nowhere close to that 40% out of the NASDAQ 100. And then you've got the Dow Jones Industrial Average, which, a lot of clients like to refer to as well. These are these, sort of, strong mainline U.S. industrial companies. That's up 4% year to date. And I think it sort of speaks to and highlights the broad sort of diversity of what's going on out there, the spread of what's going on. You have a number, 5 to 7 very large companies that have done incredibly well year to date. And then you have everybody else that's kind of in the mix as well. Important to note that if you hold a diversified portfolio, you're going to get all of that mix. And as we've said frequently before, diversification means always having to say you're sorry for something. So, it's nice to own that portion of growthy stuff that's just doing very, very well. And I just remind everybody that last year, if you owned those same stocks, you were kicking yourself because they were also down the most. So just kind of how the markets play out. We're stuck in a little bit of a good news is bad news market. Earlier today, we got some news on jobless claims, which came in at 216,000 versus 230,000 expectations. That's good news in the sense that there are fewer people that are out of work. And we got some news on second quarter labor costs, productivity, just generally unemployment rate, generally things that indicate that the labor market continues to be very, very strong. Unemployment ticked up a little bit to 3.8%, but that was largely driven by labor force participation. So more people coming out of the woodwork and looking for jobs. And that labor force participation rate is actually the highest rate that we've seen in more than 3 years. So good news from a labor market standpoint. We have more people that are out there looking for jobs, fewer people reporting jobless or making those jobless claims. But that's bad news when it comes to the Fed, because so long as the labor market is very, very strong, then the Fed doesn't really have any desire or impetus to try and lower interest rates. And indeed, we've seen bond yields tick up to almost 4.3% on the 10-year, which is the highest that it's been pretty much for this cycle. And obviously, as interest rates rise, that's bad for stock valuations. And so that's why you're seeing a little bit of pressure in the markets. It's tough, as we've talked about before. We're on the teeter-totter. We've got, good news is bad news because we want the economy to be strong, but not so strong that the Fed has to keep raising rates. And we're definitely on that side of the teeter-totter right now. If the economy weakens, we'll flip over to the other side of the teeter-totter where, oh goodness, might we be looking at a recession or some type of, massive economic slowdown. So really just a kind of that hard market to navigate that we've talked about many, many times in the past. With that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.